prop firms. Let me trade my own capital. Prop firms vanishing, scamming people. Although I don't like the word scamming, but yeah, they did scam people because they vanished, they didn't pay out. It's still happening, obviously.
And you were lucky enough to find the right rabbit hole, and I'm just interested in how you found these people that were able to teach you how the market actually operated.
You only make it in trading once you really detach yourself from the money. When it comes to day trading, then usually people depend on a specific session during the day.
All right, folks, here we are in Trading Up. We've got Bernd Skorupinski in the house. He is the number one FTMO all-time leaderboard holder with 120 times on the FTMO leaderboard. Track record verified as well. We've got him all the way over from Dubai in windy Wellington, New Zealand. So welcome to the show, Bernd.
Thank you, Cam, for the nice introduction, and thank you for having me all the way in New Zealand, Wellington. It was quite a journey coming all the way from Dubai. I think it's the longest flight that Emirates has to offer. 17 hours, 10 minutes to Auckland, and then another hour to Wilmington. Arrived yesterday. We went already for dinner. So yeah, it's very nice.
Yeah, look, it's fantastic having someone out. And look, this is the very first in-person podcast I've done. So it's a pleasure to have you on it as the very first. And today I really want to sort of dive in and let the listeners and viewers understand really how you got to where you are, top of FTMO, leaderboard and that kind of thing. So to start off with, can you explain how you went from working at Volkswagen to finding yourself in the financial markets in Dubai?
Yes, I mean, it's a long story, but I try to keep myself as short and brief as possible. So I'm now, in 2 weeks, I'm turning 42. So most probably when the podcast comes out, I'm 42 years old. I started my career in Dubai in 2009, roughly. I moved to Dubai. So originally you might hear that, but the audience might hear that from my accent. I'm from Germany originally. And I moved to Dubai right after my studies. And I got a job in the automotive sector at Audi Volkswagen Middle East. And pretty quickly, so in the corporate world, right? So pretty quickly I realized that the corporate world is not for me. And I want to be kind of my own boss, independent, want to do something for myself. Never really knew what I wanted to do. I just knew I want to be like my own boss, want to do something kind of entrepreneurial. So I stumbled onto trading. I found the right mentors pretty quickly. And to cut a long story short, I quit my job after roughly 1.5 years of being in my trading journey. Quit my job, became a full-time trader. Now I'm a full-time trader since more than 11 years. Wow. I have also a daughter that she's also 11, close to 11. And I actually started as a futures trader. Today I would call myself a multi-asset trader. I trade everything, futures, but primarily futures, stocks, but also FX and CFDs. In particular because I moved into, also I kind of stumbled into prop trading in 2022. Mid-2022, this is when I first got into I bought my first challenge. It was FTMO challenge, prop firm challenge. Passed it pretty quickly, did max allocation, and then I started to get payout after payout after payout and climbed the leaderboard. And this is where I got somehow like the public recognition, I would say. And then in the beginning of 2024, I was awarded as the all-time record holder after only 1.5 years trading with FTMO, as the all-time record holder, as you said in the introduction, with 120 leaderboard appearances in that 1.5 years. And to date, $275,000 in payouts with FTMO alone.
Right. Wow, that's fantastic. I mean, it's I want to dive back into like when you first started out, and you said you got some good mentors, and you had quite a short, I suppose, learning period of 10 months, which to me it seems kind of short, and I think a lot of other people might think it's going to take a lot longer than that. But you had was it like somebody who was a market maker within?
Yeah, I don't want to I wanted to say I don't want to interrupt you here, but I don't want other people. I always say that to use my journey as a benchmark. Nobody's journey is anybody's benchmark, right? So because every trading journey from the beginning to the end, there is no end, obviously, but from the beginning, every journey is very individual because it really depends on your personal circumstances. What kind of job you have, what kind of obligations, who you have as a trading coach, who you are learning from, whom you are learning from. There are so many variables involved, so you cannot compare my journey with another journey. Or your journey with it just doesn't work that way. So that's why, I mean, you also, we talked about this yesterday, you're even longer in the trading game than me, right?
Yeah.
So and most probably you can confirm back in the days, the whole trading journey and how to learn, and the way how to learn trading was completely different, the entire environment. Nowadays, you can learn everything online, right? It's so easy to learn trading online. But back in the days, there was no kind of Zoom webinars or YouTube or whatever. There were like some trading books or like some personal one-to-one coaching.
Yeah. Or you got a CD in the post and you had to put it into your computer and watch it.
Yeah, it was so the environment was completely different. Was it worse, or is it today better, or is it? I would say actually, I'm glad that I learned trading so long ago because there was not so much noise in the market right now. Because sometimes people ask me, "Hey, how would you get started if you had to start right now?" And I'm like, I don't know, because if you just today start out trading and you don't know where to go and you just type in YouTube, learn how to trade or whatever, like the vast of information, how do you filter that? If you don't know what's right or wrong, how do you filter that? That's a big problem these days.
Yeah. Look, I think you've hit the nail on the head there. Like, that's why a lot of people probably struggle at the outset, is because they just go down the wrong rabbit hole. And you were lucky enough to find the right rabbit hole. And I'm just interested in how you found these people that were able to teach you how the market actually operated.
I guess through connections that I had. I also used to study in California for a bit. I had friends there, and doing a little bit of research, I've got recommended 2-3 people that were former floor traders, and already back in the days, like, being a floor trader was a dying species because everything moved from physical on the floor to kind of electronic trading. So these people were like leaving the floor but still trading and teaching trading. So this is where I found some of my coaches back in the day. So I kind of also, what I did back in the days when I was still working at Audi Volkswagen, so I learned trading in parallel, obviously. That when I had always holidays, I was also traveling to get like my one-to-one coach training in. Yeah, so I was day in, day out, I was basically exposing myself and learning how to trade. And during my holidays, when I took holidays, that I basically always traveled to take like one-to-one lessons, physical ones. Yeah.
And so how did you like filter out what these guys were teaching you? Because obviously, they've got different styles and different methods and stuff. How did you kind of just come up with whatever, the Bernd style was going to be?
I think that evolved over the years, right? I also firmly believe that, for me at least, back in the days, the way how I traded back in the days to how I trade now is fundamentally different. Literally fundamentally, because I incorporated at some point in time fundamentals as well into my trading strategy. So it's kind of how you evolve as a person, how you evolve in any kind of professional field. So you evolve also in trading. And so my trading style evolved from kind of trial and error, having a base strategy and then incorporating things, logging things, journaling things, seeing like creating a sample size of trades and then seeing what makes sense, what doesn't make sense, what I could add onto my strategy, what I have to remove, and just kind of tweaking it, fine-tuning it throughout the years through sample size. So I kind of developed my, quote-unquote, my own strategy. I also want to say that because it's not my strategy, so it's not I basically used the best out of what I learned, what made sense to me. I incorporated it and created my own set of rules. And so, yes, but it's basically stuff that is out there, but it's nothing that you came up by yourself randomly that, I came up with something to beat the market and nobody else knows. No, it's all information that is quote unquote publicly available out there, right? So.
Yeah. You've probably heard me talking about trading with confidence, and honestly, it's a lot easier when you're not risking your own money. That's exactly why prop firms like my sponsor, Blue Guardian, exist. They fund traders so you can focus on execution instead of fear. And right now, they're running an insane Black Friday deal. You can get 50% off all accounts, or even 80% off if you go for a 5 or 10K account. Plus, once you hit your first payout, you can actually get another account free. To grab the promo code, simply hit the link in the description below. And so these guys have, they've given you this information. You've gone and applied it, but you're obviously working at Volkswagen at the same time. So how do you even make the time to transition or make this, get this confidence in what you've learned so that you can actually apply it as a beginner trader?
Let me try to answer that a little bit more generic, so it's applicable for everyone, not only for me, because I think people are primarily interested in, how they can incorporate trading in. That's basically the question. How can you incorporate trading into your own life, right? Yeah, because everybody has a job, everybody has family, everybody has kids, everybody has wants to go to the gym or has hobbies and friends and obligations and whatnot. So ultimately, you have to say that you have to sacrifice something, right? It comes always with sacrifice. For me, it was okay, I had kind of already, trying to build a family at this time, had a very, very demanding job, not only 9 to 5, but kind of 7 to 9 in a way. So I was okay, what can I sacrifice to squeeze in my trading as well, to learn how to trade? For me, it was kind of radical. I made a radical decision because I said, okay, back in the days, I said, okay, where do I waste most of my time? And still back in the day, I was wasting most of the times on social media, Facebook, or just on Amazon or Googling random things. You just in browsing, you're wasting time browsing on the internet, right? So I was basically very radical. So I deleted all my social media profiles so that I cannot go anywhere and waste time. I also, I always, throughout my whole life, I really loved the gym. I went to the gym my whole life. I remember back in the days that I also kind of was not really anymore taking time for the gym, and also my social life. I remember that when my friends went out during the weekend and asked, hey, you want to go out? You want to go this place? Or you want to go there? I was no, I'm working. I'm basically studying trading, right? Yeah. So it was a lot of sacrifice for me to kind of incorporate that into my life. But I think this is what it takes if you start a second business, right? And this is what trading is. It's kind of a side, however you want to call it, a side hustle. It's a profession, so it's like a side hustle in a way. And it has to be a side hustle in the very beginning, because I never recommend quitting your job too early. This adds way too much pressure. So you have to eventually, but this was basically my journey, but everybody at the end of the day has to find some time in their schedule, and sometimes finding time is not that easy. So it comes with sacrifices, 100%.
Yeah, it's a good answer. Now, you decided on swing trading versus being an intraday trader, but you still teach intraday trading to your students. How did you, I suppose, mold your swing trading strategy into a day trading strategy as well?
These are completely two different strategies. They have not, the only base of both strategies is that you find supply and demand levels. This is basically this is how I time the market using supply and demand technical strategy. This is the base of the market timing that for market timing. So this is what I use for intraday, what we call clawback straps, and the swing trading part, the market timing part. That's the only base. Otherwise, these strategies are kind of fundamentally different. But I always recommend swing trading, although it's more okay, you have to find what really fits to your lifestyle. And again, when we come back to that, everybody's life is so busy and everybody has a job and family. I think for 95% of the people out there, for the mainstream, day trading is not sustainable because they just don't have time to trade every single day or to replace one 9-to-5 job with another 9-to-5. That's also not the real purpose why you go into trading, to replace one 9-to-5 job with another 9-to-5 job. There's deeper reasons why people want to trade, in my opinion, right? It's more like having more time freedom and not to be glued in front of the screen. So that's why I don't think it's really sustainable for the norm, right? And that's why I'm a big proponent and always recommend swing trading. But there are people who have, especially the younger audience, who still go to school or they are students and have all the time in the world. So yes, I mean, the advantage of day trading is we have to obviously also differentiate a little bit. When I say day trading, I don't mean scalping, right? This is like another extreme that I would just say clearly no go. But when it comes to day trading, you get more sample size in a shorter period of time, which is great, right? You get more results in, so you can tweak much faster rather than, especially in the beginning, having more sample size to see whether your strategy works or where's the parts that you need to tweak is obviously better than waiting for a setup sometimes for a week and then sitting in a trade for 2-3 weeks when it comes to swing trading. Obviously, you see much quicker results. Whether they're good or bad, all of them are good because they give you feedback. You get way more quicker feedback. And that's, in the beginning, it's all about feedback, right? And you need that feedback from the market. So I think in the beginning, day trading is great, especially for getting the feedback and getting the results in and then having a sample size and then tweaking the strategy.
And I suppose it's quite difficult for somebody to understand themselves really well to go, right, I know that I'm a day trader or I know that I'm a swing trader. Do you have any kind of tips or advice for somebody to kind of work out what they should do? Or even if they start off, like you've said, day trading, and then they kind of, feel that they've got a good rhythm here, then they struggle to switch back to swing trading because that was the goal in the first place, but they're doing all right with the day trading, that making it a switch to swing trading seems like counterproductive.
So first of all, everybody should at their own schedule and see how much time they have. And when it comes to day trading, then usually people depend on a specific session during the day. People sometimes ask me, what session do you enjoy the most, or what session do you trade? I don't trade sessions. I just trade whenever there's a setup. I don't trade sessions. But when it comes to day trading, you kind of mostly depend on sessions, right? Whether it's the New York session, Asian, European session, whatever it is, right? So if you're like you, for instance, and you live in New Zealand, and then it's the big time difference, the gap to New York, Asia, whatever it is, I don't even know, right? We talked about this in the taxi this morning when it was it's weird for me because it's Monday, but the markets are still closed because in Dubai it's Sunday, right? So it's so that you have to understand, okay, in which time zone do you live? Can you really incorporate that kind of session into your trading routine? You don't want to get up in the middle of the night to trade your session. Doesn't make any sense, right? Simple things like that. But to answer your question a little bit differently, whether you do day trading or swing trading, what matters at the end of the day is your results, right? And people usually tend to go into day trading because they think they can, and that's a misconception. I think it's also a myth that is floating around in the financial market, that with day trading, you just by default make more money because you have more executions. But more executions doesn't make you more money, right? The only thing that makes you more money in trading is scaling the capital. Because your strategy is kind of fixed, right? Your execution is fixed. And if you feel like at some point of time, first of all, let's assume you have any kind of strategy. It doesn't matter whether it's day trading or swing trading. You have any strategy. Now, you see that your strategy based on your results, black and white results, on your logs, on your journal, that you are consistent in your approach, regardless of outcome, you see you're consistent. Well, if you feel like you're not making enough money, well, what do you have to do? You don't have to trade more often. You don't have to over leverage yourself. You scale the capital. That's the only variable in trading. And people sometimes, a lot of traders don't understand that's the only variable when it comes to how do you make more money? Well, first of all, you get consistent. That's the base. But if you're consistent, the only way to make more money is scaling capital. That's the only variable. Right. So, and it doesn't matter whether you're day trading or swing trading. It's just scaling capital once you're consistent.
And have you seen, like, you've had a lot of students go through your program. And have you seen people scale the capital and struggle with the extra zero on the end of it or whatever it is?
100%. I mean, that's why what I said in the beginning. There's a beginning, but there's never an end. It's a lifetime journey because you want to scale for. I want to scale for the rest of my life, right? You're never kind of quote unquote satisfied with one number, because if you're comfortable with trading X amount of dollars, well, then you can scale capital and try the next step. I personally call this milestone planning. You have certain milestones. You, for instance, start with $500 of risk. If you feel comfortable trading $500 of risk and you kind of then become consistent trading $500 of risk, then you can scale and take $800 of risk or $1,000 of risk. I'm making up these numbers, but you build your own milestones. But then if you see, with $1,000 of risk, 4 digits. I remember, because for me, long time ago, when I moved from $250 of risk, I moved to $500 of risk. I remember, and I moved pretty quickly to $1,000 of risk, and it was like 4 digits. The first time seeing 4 digit on my terminal was like, I was getting nervous. It was different. Although I was trading the same strategy, I didn't change anything, but the numbers made me execute differently, and the numbers made me more nervous in front of the screen as well. So I remember also, I was trading 4 digits. So every time I saw also 4-digit profit on my screen, I pressed close automatically, just manually without applying, my strategy, my trade management, my target rules. I was just closing the trade because it was like so much money in a short period of time, 4 digits. And then I realized maybe I scaled too quickly to 4 digits. Right? And then, but for everyone is obviously also different. So, but that was for me the case. And then, and then you scale and you continue scaling, right? And that's a lifetime journey. So yeah, that's how you do it. That's why I call it milestone planning. And you have to find out these numbers for yourself, what you're comfortable with, right?
Yeah.
And you should rather do smaller steps than bigger steps, because these bigger steps are usually, they come from greed.
Well, because I think a lot of people get to that point where they go, right, I'm going to scale, I've got the consistency, I'm going to scale, and then they scale too much, and then they straight away go, what if the first trade's a loss? And then the second, what if I go on a losing streak? And then all of a sudden they're like 3 trades down, and the higher risk, they've got to make that back. I mean, have you got any special techniques you would tell someone or teach somebody to get over that level, or even just a process to do?
I mean, in general, right, when it comes to trading, especially if you follow only the technical approach, you have to be aware that the outcome is always random. It's always random, right? You cannot control the outcome. So you can obviously start, and you cannot control that. You could potentially start with I don't like to call it a losing streak, but you can start with 3 losers in a row. Right, you can do that, right? But if you have a consistent if you know your strategy is consistent, in the long term, you kind of know that it will play out in your favor if you execute it the same way, even if you start with 3 losers, because the outcome is random. But over the long term, your strategy, if you have done it long enough, if you have locked enough trades, that you see, okay, over the long term, I am consistent, right? And this is where you just basically, right, when we talk about, and I teach people, I emphasize in focusing on the 2 most important KPIs in trading, the only KPIs, key performance indicators, right, which is risk to obviously for us it's self-explanatory, but for a lot of people, new traders, it's not self-explanatory. That's why I want to mention it. It's purely risk to reward and win-loss ratio. Win-loss ratio. However, your risk to reward ratio weighs much more than your win-loss ratio, right? Because if you have like a fixed targets, or even if you have a fixed target, let's say what I recommend, at least a 1-to-2 risk to reward ratio as a fixed target, if not 1-to-3, but let's say 1-to-2 is the minimum, then you can, as you know, you can have even a 40% win rate and you are highly profitable. Right? So and then to make people, to clarify to people, you only focus on execution on these two KPIs, primarily on risk to reward ratio. And the result, if you follow these and your KPIs are green, meaning if you have an average if you have an average risk to reward ratio of 1-to-2, a 40% win-loss ratio, the profits are just the result from meeting those KPIs. So the money is just a result, basically, from your execution, from meeting those KPIs.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
And so it's kind of pretty much a process. It's only a process. It's following a process. It's not the money. But that's the nature of trading, right? We are all kind of running after the money. But once you realize, and this is what I really preach to people and tell people, you only make it in trading once you really detach yourself from the money. It's easier done. Yeah, it's easier said than done, not the opposite. It's actually quite difficult and it takes years. This process to kind of getting detached from the money and just following the process because you know the outcome is going to be profitable in the long term this is the longest process in trading, right? Getting detached from money. But ultimately, if you finally become detached from money, that's the ultimate goal as a trader, because then you can basically trade almost any number.
And is there any way to fast track that process?
No.
Because it is.
Now I interrupt you because there's no way to fast track that. It's really there's no way to fast track that because you have to, because nobody kind of literally sits next to you and like presses the button for you. You have to make experience is so much worth. And you have to make that experience yourself. Nobody can. Even like you as a trading coach, me as a trading coach, we cannot give. We have limited influence, right? We can teach people the execution style. We can teach people the strategy. We can help people tweak their strategy, giving tips and here and there. But we cannot help them in getting the execution in. We cannot help them getting the experience. They have to get the experience themselves, right? That's the variable we cannot control.
Yeah, and I think it's a very important one because I think a lot of people don't talk about that. I mean, I've interviewed hundreds of traders, and nobody really talks about the fact that it actually comes down to experience, right? If you don't do the experience, don't do the time, it's very hard to build that into your like psyche.
But to add here, what people also sometimes don't understand, they say, you might heard the saying, practice makes perfect, right? That's not necessarily true. What I learned throughout the years, because people come to me who have like more experience that I have, but they have the wrong experience. You know, I always say you don't know what you don't know, right? If you practice wrong and you don't have anybody to correct you, how do you know you practice wrong, right? You're building a faulty foundation. It's a house of cards, basically. So how do you acquire skill with everything in life? Is by getting directed practice, right? By somebody showing you, somebody who is better than you, then showing you how to do things. And I don't know why it is, but in trading, a lot of people think they can figure it out themselves. I don't really. Maybe you can help out here. maybe you know where this is coming from, because I don't know where this notion is coming from, that people, especially in trading, think they can figure it out themselves. When it comes to any other profession in the world, people ask for help. People ask for guidance. I mean, you cannot just fly a plane by yourself, right? You cannot become a lawyer by yourself, an engineer by yourself. I mean, we just talked about your daughter is about to make passing the driving license, right? You cannot just do this yourself. You need somebody showing you how to drive a car.
Yeah.
But why this notion exists in trading, that so many people think they can figure it out themselves and they don't need any help, I really don't know. But trading is the same thing than any other profession in the world. So the only shortcut that you can get in trading is if you get proper help right from the beginning.
Yeah. I mean, I think, in answer to your question, I mean, I think the act of actually placing a trade is quite easy. But it's everything else that goes behind it, and that's why people kind of get fooled into thinking that, okay, well, I should be able to do this myself without any help. And the other thing I've noticed is, I mean, it tends to be, women tend to be way better at following these rules
much better,
or the instructions that they've been given, and when they bought a course or whatever it is, they just go through the process. Versus men, it's just their nature, right? That's just what it's inbuilt. And us men seem to think, okay, well, I know better. This guy's telling me to do this, but I'm going to do that.
No, I know. Yeah.
So yeah, it's interesting.
Yeah, maybe you're right. It has something to do with, first of all, accessibility of the markets. That is accessible for everyone, right? I mean, it's so easy to open up a brokerage account and start trading within like 60 minutes or so. Deposit money with a credit card and let's go. And then how quote unquote easy it is to execute a trade as well. So it's all easy, but it's not easy to get the results in, right? That's where the notion is coming from. That is also something you can do yourself. But at the end of the day, trading is a business like any other business in the world. It's like a profession to learn, right? And how do you learn a profession? By getting proper guidance. Right?
Yeah. So let's dive into a bit of technical stuff here. So like you do teach supply and demand as part of what you do, and you're kind of looking for that spot where there's no more orders left in the market and the market's about to turn. When people are drawing up supply and demand zones and stuff, what are some of the common issues or mistakes you see them doing, or things that they're missing as part of their process?
So, multiple things here. So, obviously, just let me tease already that we're going to do a second episode where I do like a strategy breakdown on the screen, like properly showing people. Like now everything is more like we're going to do a second episode where everything is going to be visual. Right now, verbally is sometimes a little bit difficult and hard to grasp for the audience. So that's why we said, since I'm already in New Zealand, let's do a proper strategy breakdown on the charts.
Yeah.
So it's going to be a lot of value for the people. Secondly, the supply and demand part is only a small portion of my strategy, right? I call it a two-step mechanical process where I look into fundamentals to get a market bias, and the second part is then the market timing, really to placing my orders with supply and demand. When it comes to, because your question is just purely based on supply and demand, so what I see, so the mistake that people make is just, they're not, first of all, a lot of people I see are just not capable. They think they draw the zones correctly, but they just don't. They just don't know how to draw proper zones. They don't know the process of drawing proper zones. That's the first mistake that I see. And once you get into, let's assume, okay, you can tick the box of drawing zones nicely or draw perfect zones, you figure that out. Based on your set of rules. Then it's about, the question that I usually get is, hey Bernd, there are so many zones on the charts. Which one to pick? Let's talk about demand. There are so many. So demand is like below current price. So I want to buy in demand for like the newbies. So there are so many demand zones. Which one should I pick? Which one do I know is right? There are like 3-4 zones, and this is where then we dive deeper into supply and demand and look into multiple time frame analysis, where it's like, we call it the big brother, small brother principle, where it's basically, which means that your smaller time frame zone has to be covered by the higher time frame zone, right? You look basically at so when it comes to swing trading at the weekly chart, you mark your higher time frame weekly zone, And within that higher time frame weekly zone, you look for the smaller time frame zone. So you have basically trading a covered zone, which is then the concept is that you're trading with the power of the higher time frame zone. Higher time frame equals more unfilled orders. Consequently, you get a bigger move into that direction, right? So if you basically then follow that big brother, small brother rule, where it's like you look for that higher time frame coverage, right? So that your daily zone inside your weekly zone, or maybe if you do like day trading and your execution, your lower time frame is a 4 hour chart. So your 4 hour zone is within a daily zone. So you're trading covered. So your small brother is covered by the big brother. Then you can basically, just by default, you disregard a lot of zones around it, because you don't find many smaller time frame zones that are covered by the higher time frame zones. And then when you're capable to draw only high quality good zones, really there's almost not much noise anymore, and you have basically 1 or 2 zones left that are the ones that you execute. These are basically the 2 rules you have to follow when it comes to supply and demand. First, learn to draw properly zones, and then apply the big brother, small brother principle that you're covered by the higher time frame. And this is then the zone that you going to trade then as well.
It's a nice little, it makes sense. I like the whole big brother, small brother kind of analogy. Yeah. It makes sense. There's weight behind those zones versus the other one. So the other part,
I always said, basically, it's an analogy, because I always said, if you're 12 years old and you get into a fight, if you have your 18-year-old brother behind you, if he helps you, you're going to win that fight. That's the analogy. Yeah. So it's like higher time frame has more power, more unfilled institutional orders, so you get a stronger move, right? The higher time frame zone wins always against the smaller time frame zones, conceptually speaking.
Yeah, I like it. Now, the other part of your trading approach is now fundamentals. You mentioned it a bit earlier. Do you want to walk us through how you decided to bring them in and how much of a part they play?
What I realized, I started trading only technicals in the early stages of my career. I was only trading technicals, so supply and demand, and I realized that the results I get into consistency in a certain consistency level, but again, when you apply technicals, I realized the outcome is always random. You know you're doing everything right, but you have 3-4 losers in a row, and you feel like you're doing something wrong. And then you have all of a sudden again 4, 5, 6 winners in a row, and then you're like, now you can beat the market consistently. And then again, you have that kind of potentially, I don't like the word losing streak, but then you have again a few losers in a row, because the outcome is random. Once then I was introduced to certain fundamentals and moved more like into higher time frame trading, which is swing trading, execution on a daily time frame chart. So I use my daily charts for execution, and my higher time frames, the weekly chart and the monthly chart, for like the fundamental bias, my fundamental bias, although I use also daily charts for fundamental bias, but predominantly the weekly chart. My results became less random, and even more, I achieved even more consistency once I introduced fundamentals into my trading strategy. Because what people have to understand is that when it comes to fundamentals drive price. The biggest misconception in the market is that people say price drives price, which just doesn't, it's fundamentally wrong. Price can never drive price. So it's the fundamentals that drive price long term. But the fundamentals are lagging in market timing, because fundamentals, if I tell you today the euro dollar looks bearish and the dollar looks bullish, fundamentally this can still take time to play out, because fundamentals take time to play out. So they are lagging market timing. And that's why the technicals are great, like supply and demand, for instance, when it comes to then really pinpointing the sweet spot where you expect the market to turn. And obviously, with technicals, you can determine a proper risk to reward proposition on your trade as well, which on fundamentals, it's impossible because where you're going to place your stop, right? You need the technicals, you need the chart to really define your entry, stop loss, and then eventually your target as well to get like a proper risk to reward proposition and really time the market. So, and that's why then once I incorporated the best of both worlds in a way, my trading got much better, much better, right? And this is also then how I started with the whole FTMO prop firm journey. Where like I already like was doing that for quite some time, like for years already. This approach, and using that, my trading became much more smoother than just using technicals.
I mean, fundamentals. A lot of people coming into not using fundamentals, and they think, okay, well, let's add that into what I'm doing. I mean, how easy is it to get it wrong, given the fact there's so much kind of information you need to sift through?
Yeah, that's actually good that you addressed that, because people think fundamentals are your monthly FOMC meetings or GDP or non-farm payroll. People like consider this as fundamentals. I couldn't care less about this information, right? Because again, a trading strategy has to be objective. Any trading strategy, the goal is it has to be as objective as possible. Because once you are making subjective decisions, you cannot become consistent, right? Because your decision making is changing based on your opinion, and we cannot have opinions when it comes to execution, right? Then we can never achieve consistency. It just doesn't work that way. So you have to become consistent. So you need to use fundamentals that you can, in a very objective way, analyze. And for that, I use basically. So how do we define fundamentals in that way? Because so fundamentals you can define as everything that is not derived from price. So everything that is not derived from price. So RSI or MACD would, like any kind of conventional indicator, would not be fundamentals because they're all derived from price. Right? Yeah. Price has to move first, otherwise the indicator is flat. Right? Yeah. Correct. Yeah. Everything that is not derived from price, I consider fundamentals. So, and then you have not much left that you can use as an objective fundamental tool that is not derived from price. So my primary go-to is the COT report, right. Which is a weekly report released by the CFTC in the US. Right? It's futures data. So basically, just in a nutshell, otherwise for the whole CUT report, we would need a different podcast. Yeah. But again, tomorrow, whenever we shoot the technical, the strategy breakdown, we shoot tomorrow. So I'll go deeper into that kind of part. Otherwise, it just verbally doesn't make a lot of sense. So it's basically they classify the financial market into three parties. That there are only three parties in the financial market, which is they call it commercials, non-commercials, and non-reportables, which are the retail traders. So, and these non-commercials and the commercials, these are the big players in the market, the big money management firms, hedge funds, banks and institutions, big corporations who hedge price as well. So, and they have to report on a weekly basis to their positions to the CFTC. And the CFTC compiles that data and releasing it on a weekly basis for the public, right? And that's the COT, the Commitment of Traders report, just in a nutshell. And if you know how to filter that data, if you know how to read that data, you know what I call it the smart money banks and institutions, the big players, you know what they're up to in the long run.
Right.
And you kind of position, and that's the part of the strategy. You plan ahead and you position yourself alongside the smart money and you trade against the retail trader, because I'm going to show that as well in my strategy breakdown, because you can clearly see that the retail traders, because these are the non-reportables, they are most of the times just wrong, completely wrong. Because that's right. I mean, it kind of makes sense in a way if you think about it, because if we know like all the brokerage data that retailers are just losing money, 80+% of retail traders are losing money. That's one part. And then second part is that you have to understand that when it comes to trading futures, trading is a zero-sum game. So what is a zero-sum game? So for every buy transaction, you need a sell transaction. For every sell transaction, you need a buy transaction. So you need people who lose. You just need people who lose, right? So these are the two components that kind of make sense. That who is the party that is losing the most is us, right? The retail traders. So you trade against the retail traders, and you trade against the dumb money, and you trade with the smart money.
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide.
And then I look at seasonal tendencies as well, because a lot of product. I know you told me you're a gold trader. Gold is very seasonal. That, for instance, gold, you know that during the Christmas season, November, December, gold usually tends to be super, super, super bullish, and that there's certain dates. If you look at seasonal tendency in gold, that is 5 days before Christmas, I think, that gold is usually just, is it 5 days before, after? I just, sorry, from top of my head, I don't know. But there's this really short time window of opportunity when it comes to gold during the Christmas period, where it's like almost always bullish. So out of the past 15 years, 14 years, it's bullish. So there are like these small time windows, like especially in gold, that are either extremely bullish or bearish. So you add seasonal tendencies on top, and then I look at certain valuation models, whether it's like versus the US dollar versus interest rates, because interest rates play a fundamental role, obviously. Interest rate changes play a fundamental role in the entire economy, right? So I add all of these things into my, and it might sound now a little bit overwhelming, but it's actually quite digestible. If you see that on a chart, because everything is like, kind of looks like an indicator on a chart that you can objectively read, and then you can get your market bias. And then if you say, okay, you're bullish or bearish, then you go to step 2, to the technical part, which is supply and demand. If you don't have like a fundamental bias, then you don't have an edge in that particular market. So if on gold, for instance, if there's no fundamental bias, if like I get contradictive information, then I don't have an edge in gold right now, and I'm not like, don't even have to go look into market timing, because I don't have a fundamental edge. And we're going to do that analysis as well, like on the currency pairs, where based on the data set, I have a strong fundamental bias: bullish dollar, bearish the euro, bearish the Swiss franc futures, bearish the British pound. Where I have like a strong fundamental bias. This is where then I go into where I have a strong edge, and my outcome is not random. And then I can go into market timing, and then time the market. Because what people have to understand is that when it comes to fundamentals, it's a self-fulfilling prophecy that the market has to shift at some point of time. It is what it is. Right? It's not possible that you are fundamentally extremely bullish or bearish and the market is not shifting. It doesn't mean it shifts tomorrow, day after tomorrow, but eventually it has to shift.
So imagine you get in a position, right, and you've got a real strong fundamental bias behind it. Are you going to perhaps increase your risk or hold on to that trade longer? And
that's a good point. So it happens to me as well that you have a strong fundamental bias, right? It just happened recently, on a few trades in a row actually, where I just remember one from top of my head on the USD Japanese yen, where I was fundamentally extremely bullish. So I placed my entry in my stop loss and I got stopped out. And just right below, so it was a demand zone, obviously, because I bought, I was bullish. Right below that, the demand zone that I bought and put my stop loss below was another good zone. So and this is part of my rule set, if your fundamental bias doesn't change, you're allowed to get back into the trade.
Right.
So I took the zone that was below that demand zone where I got stopped out. It was almost right below it, because you have to kind of make a decision, right? You have to make a decision. You can say, well, I'm not taking the first zone, I'm waiting for the lower zone, but then you might run into the possibility that you miss out on that trade because it might already reverse on the first zone. But in that case, I made a decision. I took the first zone because I was kind of, I don't want to say FOMO, but I wanted to get into the trade because fundamentally it was like a strong bias, right? So you have to make decisions, and losing is just part of the trading game, as we know. So I made the decision to buy the first zone, got stopped out, but then the second zone, because you have to get back in, because fundamentally nothing has changed. Just the market timing was wrong. And again, as we know, the technicals, the market timing is, these are just, whether you do supply and demand, whether you do support and resistance, whether you do price action, I realized, or do you do trendline breakouts? It doesn't really matter when you're fundamentally in the right direction. If you're fundamentally right, you can time the market technique with any technical strategy. You're on the right side. You know, you're on the right side. But that's why it's a very important rule that I also teach, that you have to get back into the trade. Because a lot of people, for them it's hard if they get stopped out in one market, that to get immediately back into a trade, because they feel like they do it out of revenge trading, or but it's actually, if you put rules around it, and if it's like, if you say, okay, fundamentally you're in a clear, you're clearly bullish, you just technically, because technically it's just like a chart. It is like a chart pattern at the end of the day, and chart patterns don't mean anything in a way, because the outcome is random, that you just, okay, I get back into the trade, same risk, entry, stop loss. Obviously you need a stop loss, right? You could potentially be wrong another time, but so that's part of the rules, that you have to get back into the trade if fundamentally nothing has changed.
And so if, like, for example, I'm trying to work out when do you get out of that trade. So are you just the kind of trader where you've got to set and forget, take profit, or if you scaling out, or
no, it's stops? Like basically you have a demand zone where it's like you set your entry at the beginning of your demand zone. If I say the terminology, just people have to understand it. So at the beginning of the demand zone, but below that demand zone that you highlighted as the demand zone, so the beginning and the end, kind of the highest point. So the highest point of the demand zone and the lowest point of the demand zone. So below the lowest point of the demand zone, you put your stop loss. Right? It's just also like a very objective way how you draw your zone. You need to you have to have an objective way to draw your zones. So at the top, let's say at the top of the demand zone, you place your entry. At the below the lowest point of the demand zone, you place your stop loss, and then you just let it play out. You don't touch anything, right? And if price touches your stop loss, you're out of the trade. And then you find your next demand zone. You do again the same. You follow the same process, and then you see if the trade plays out or not.
And so in terms of, taking profit, are you setting your take profit as a fixed TP, or are you managing that trade?
I usually manage a trade, but I recommend people in the very beginning to have like fixed TPs. As we just earlier said, at least a 1 to 2, if not a 1 to 3, because usually if you're fundamentally right, price could move in that because you're kind of timing really market bottoms and market tops, right? So the price could go eventually into your direction for quite a long time, right?
And so when you start seeing that, so you've got the fundamentals right, it's going in your direction. What kind of risk to reward are you potentially taking at that point?
Since my zones are also bigger, right, I go for 1 to, also like 1 to 2s, 1 to 3, 1 to 4s, right?
I still fairly conservative, not like nothing crazy or ridiculous.
No, nothing crazy or ridiculous. No, in terms of setting goals, for me is also, my goal is to achieve 2 Rs per month on average. So 20, so times 12. So 2 times 12. So on average, so my goal as a trader is to achieve between 20 and 24 Rs per year, right? And then it's quite easy. And then again, this goes back to scaling capital and knowing how much money you can potentially make, because also my risk is constant. Because if you say now, for instance, okay, you risk, let's say let's make easy math. If you say, okay, I risk $1,000 per trade. So if you say your yearly goal is 20 hours, you make 1,000 times 20,000. You can potentially make $20,000 per year, right? So if you can achieve that consistently, and $20,000 is not enough for you, well, you increase your risk. How do you increase your risk? Not by keeping your capital stable. No, you increase your capital size, right? And then you scale by taking more risk. And if you then say, now I'm capable to trade $2,000 because your yearly target remains the same, your yearly goal remains the same, which is, let's say, 20 hours, right? And now you're taking $2,000 of risk. But everything remains the same, right? It's like there are only a few variables that you change. You never change the strategy. You never change the execution. The only thing that you change is you never change your targets, even, right? It's like your kind of your goals in a way, right? The only thing that you change is like kind of the variable is your risk per trade, but that only when you are allowed to change it, not randomly. Otherwise, the whole system doesn't make any sense. You cannot, and there's a lot of people do that, right? They're getting into a winning streak. They're getting greedy, and then they're like doubling, tripling their risk. Or they're in a losing streak and they're, lowering their risk. Or they're even like, the worst part, you're in a losing streak and you're increasing your risk because you want to make back the money that you lost, right? And then you're getting into that rabbit hole and digging yourself into that hole that you never come back out of. So it's actually quite simple if you know what to look out for, right? But people have to be aware that because there's so much, again, coming back to the information right out there's so much noise that I call noise, that who to listen to and what videos to watch. Like, it's almost, if you're like new and you don't have guidance, it's almost impossible, right?
Yeah. I mean, talking about like risk, so are you risking a percentage of your account, or are you just purely looking at monetary
values? Yeah, it's for me the best way to also then eventually scale and to keep my risk stable. So whether I say it's $10,000, $20,000 per trade, and then scaling then from there.
Yeah, okay. And in terms of have you ever gone through a serious kind of drawdown where you're like, I've had a few losers in a row, and then,
of course.
But how have you dealt with that mentally?
I'm really at the stage where I would say I'm pretty much detached from the monetary values, that I don't worry necessarily of getting quote unquote mentally unstable when it comes to my trading, or that I do stupid things. I mean, I'm also when it comes to the way how I trade and what I'm teaching, I'm getting into a trade on average maybe once a week. I'm taking one trade per week on average, right? Let's say per month, maybe 3 trades, right? It really depends on what the market gives you. And as I said, it can be also that in a week I take 3 trades, but then it might be that I'm 2 weeks without a trade because the market doesn't give me any kind of opportunity, right? Because I'm fundamentally not biased in any market, or I'm waiting for something being in a more extreme, right? So it's really that people say, I cannot only have 2, 3. I'm not making enough money if I have only 2, 3 trades, right? That people, that's there. But then it comes back to, because then you're not managing enough capital. Because with that frequency of trades, I can, quote unquote, easily achieve my 20 to 24 hours per year. And that should be the target for all traders. I see sometimes ridiculous things that people say they achieve 30 hours per trade, or
in a trade,
one trade. Or the problem is that you can trade. So if you trade small capital, you can also trade more aggressive. But trading very aggressive and having these huge R's number per trade, like 1 to 8, 1 to 15, 1 to whatever, is just not sustainable if you trade also higher capital, right? We're talking 7-digit and up. And the goal for everyone should be that increasing the capital and then also lower the frequency of trades and having that 20 to 24 hour target, and with that lower frequency of trades, that you can achieve these targets. And then if you want to make more money, again, you increase capital, right? And these days, increasing capital, you don't need your own money to do that. You can do this with prop firms, right? But it's a whole other topic. But
Yeah.
I think you get my point as well.
Yeah. I mean, so going back to like your trading routine, your daily routine, can you walk us through how you sort of set yourself up for either a day or a week?
Yes, it's pretty simple. I do my analysis during the weekend because, again, my focus is usually the COT report. The way how I analyze the COT report, it comes out once per week on a Friday, so that's why I just on the weekend, it's basically for me Dubai. Saturday morning, the report is out. I get the data on my charts in a very nice graphically designed way. So then I start analyzing on the weekend all the markets. So I analyze the underlying asset, the future. So my analysis, regardless where I execute, because when it comes to prop trading, right, we tend to execute on CFDs and Forex pairs, but still my analysis from day one is still on the underlying asset, on the futures, because that's what everything else is a derivative, right?
Yeah,
People
yeah.
usually don't know that. A lot of new traders don't know that even gold, like you have, like it's at GC, it's the futures that drives, that is like the underlying asset that drives the price. It's not XAU USD, right? Anyway, so I analyze the futures on the weekend, set my watch list, look for fundamental extremes, create a watch list kind of where I would like to place my trades, and then set my alerts close to where I want to enter the market, whether it's supply or demand zones. And then, on a Monday, I just wait just during the week, I wait for any kind of alert to be triggered, which means, price is very close before my zone. And then I place my trades. And then it's basically what I call a set and forget and get a live order, right? Because it just takes you 5 to 10 minutes per day, literally, to kind of check the market. What is it doing? Is something close to my alert? Do I have to place a trade? No, okay, I move on. And even if you place a trade, placing a trade, as we know, everybody can place a trade. It takes like seconds to place a trade, right? That's the least amount of effort. Then once you place a trade, and let's assume one trade is getting triggered and you're in a trade, the only thing then you have to do is manage that trade. And that managing a trade is something that you also like. The only way that I manage it is once price moves. Basically, one of my rules is once price moves 1-to-1 in your favor, you move your stop loss to break even. So it's a risk-free trade, and then you let it go. Okay. Right?
And are you market entry or limit order?
Limit orders, right? So that's why set and forget is kind of associated with limit, because you set your trade before price is in your zone, right? So. And then you just wait until whether price hits your zone or not, right? Is something you cannot influence as well, right? The market will do its thing, whether you sit in front of it or not.
Yeah. And so back in the day, or even now, are you still like journaling and looking at performance stats on a regular basis? Okay. Did you ever do it?
Yeah, of course. I'm preaching that. That's why in the beginning, this is a must. Otherwise, you cannot. I hear so many people saying kind of, I'm going to tweak that, or I'm going to change this on my strategy. And then I'm asking back, why are you doing this? Because I think, or they say, because I feel. You cannot think or feel when it comes to your data, right? You have to see it. You need like physical proof that you need to change something. Otherwise, it's just a gut feel.
Yeah.
And in trading, it doesn't work that way. So, of course, it's a must to track and be very picky with your journaling process. I know it's a lot of work, and I know it's like, I remember back in the days when you're like having a winning streak, journaling and logging is all the fun in the world. When you have a losing streak, you're like, fuck that, I start with reading. I don't log. Maybe people can relate to that. But it's a must, it's assisting work that needs to be done. It's kind of like before and after the gym, the stretching at a certain age, it's just feels a waste of time, but it's a must.
And so I suppose, was there a point in time where you decided, I don't need to do the journaling anymore? Or?
Yeah, once you really, after all the years when I saw like the consistency and I can more or less always every year achieve my targets. And it's just really, because my strategy is kind of now ingrained in my DNA in a way. Like it's just, whatever I do, I just know, right, what I do. If you just if you really trade for like almost like 10 years plus, and over I don't know how many years, you're executing the same way not every day, but you're analyzing the market every single day the same way for every week, every month. It's just then, becomes like who you are.
Yeah.
And it just then, you don't need to log anymore, especially not with the kind of trading style that I use. Right?
It's quite interesting. I mean, like, I suppose and possibly something to push people more towards swing trading, because you don't need to do as much journaling, right? So if you're only taking 1 or 2 trades a week, then you don't have to journal as much. So you're saving yourself a bit of time there. Talking about prop firms, so obviously you've done really well in prop firm space. What do you see a lot of people struggling with when they dive into a prop firm, either for the first time or they've been around and they've gone through hundreds of challenges and they're still not really getting withdrawals? What would you recommend somebody take as a step-by-step approach?
Yeah, I mean, the prop firm space changed also a lot. Like, just when I started off to now, and it's like, again, I started only prop trading in mid of 2022. We are now in mid of 2025. So it's like 3 years.
Yeah.
Right? It's crazy. Everything changed 180 degrees in a way. Where it was like, I was glad that I was prop trading during that time, because I felt like this was the gold rush of prop trading. And now it's, you had like during that period of time, you had prop firms vanishing and scamming people. Although I don't like the word scamming, but yeah, they did scam people because they vanished, they didn't pay out. It's still happening, obviously. And it became way more restrictive as well. But there's still obviously a handful of prop firms that you can go to. Don't want to say any names, obviously, because I'm also burned when it comes to prop firms. But there's still obviously a few go-to prop firms. And I would always recommend to get started with prop firm and to take this, to trade prop firm, especially in the beginning, once you're not yet consistent, to use kind of these challenges as your driving license test.
Yeah.
I like that analogy, like using that, because I would definitely not recommend right now, if I'm new to trading, the thing that I would definitely not recommend or do is depositing my own hard-earned money into my trading and into a newly opened trading account and trade my own money. I would definitely not do that. It's stupid to do that, because rather buy yourself a small challenge, the smallest challenge, like from a big firm, whatever it is. Buy yourself a small challenge, and just start trading there and see if you can pass this challenge, right, with your strategy, not by over leveraging yourself, not by taking too much risk, because nowadays a lot of people do, and I fully get it, right? They're trying to, okay, let me try to pass the evaluation as quickly as possible. Let's go all in. Let's see if it works. So I get to the funded stage as quickly as possible. So they try 10 times, kind of, in a way, kind of the casino approach, right? What is it called? The slot machine approach, right? Let's throw in a coin 10 times and see if I get a payout or not at the jackpot. Not with that kind of approach, but really like with your strategy. Because if you imagine, if you're not capable of passing a prop firm challenge, why would you ever touch your own money if you're not capable to pass a prop firm challenge with your own strategy? Because, I mean, eventually, I can almost guarantee you, if you're not able to pass a prop firm challenge with your strategy approach, well, and you say, okay, quote unquote, fuck prop firms, let me trade my own capital, you're going to eventually wipe out your account.
Yeah.
Pretty, certain. I can almost sign this off for you, So, but if you are able to pass a prop firm with your strategy, using proper risk management, not over leveraging yourself, And then also maybe getting 1-2 payouts or so. Like really, if you see like prop trading consistency, then you can incorporate your own capital at some point of time, but not just if you can. That's why it's like your driving license, right? If you don't pass your driving license, don't go to a Formula One. Don't sit into a Formula One car and think you will not crash it, right?
Yeah. What about the future of prop trading and I suppose the trading industry as a whole? Have you got any views on where you see it heading?
So the prop trading is definitely something that I believe eventually can make normal brokers obsolete in a way, because you have way too many benefits of trading prop, which is not, you don't have to risk your own capital. And even if you lose a certain amount, you don't have to kind of pay it back, right? So for people, I'm just simplifying it now for the people who are not aware of prop trading. So the benefits of prop trading, real prop trading, clearly overweights like the disadvantages. And the disadvantages only kind of exist because there's no regulation and there are just still like too many shady firms out there, right? These are the disadvantages because we don't have regulations yet. So I think with more regulations, eventually comes a little bit more better prop trading, a more safer prop trading environment as well. And then I don't see a reason for the majority of the people why they would take their own money to trade with if they can trade prop money and scale with that, because it's also way easier to scale. And then you have now these instant funding models as well, where you can just don't have to run through an evaluation and just trade immediately and get your profits from day one, which is great as well. But eventually, I think we are heading into more this kind of, even like in the futures market, heading more into prop trading rather than, the traditional way of trading that I have to deposit money into a brokerage account and then you deposit $1,000 and then you want to do like 5% a month. All right, nice. It's $50. Congratulations, right? It's not really life changing. Yeah, that's the problem.
Yeah,
but that's the problem also because of that the mainstream, like not the mainstream, but it's just people just don't have like $100,000 laying around and like just to trade with, right?
Yeah, exactly.
People don't have that, and that's why prop trading is just so promising. It just needs a little bit of more regulation, more improvement, and filtering out the bad apples, right?
Now, one of the things you have got is like a hybrid AI fundamental kind of indicator or a set of indicators that you use. Where do you see AI fitting in the future in trading?
Yeah, it's hybrid AI is because the way how we had to, back in the days, code our tools on a specific software. These days, we can use normal algorithm, normal code with like TradingView, which is not necessarily real AI, right? It's more like a buzzword. But where I see, for the retail trade, sometimes people ask also, hey, will AI take over trading or will it make like trading different? There will be always, buyers and sellers in the market. And for retail traders, it's similar to trading bots, right? That people think that, hey, they can develop kind of, or whether it's AI technology, a trading bot, they can use that, or it will be available in the future for the retail trader that just magically, without you being skilled, that you have that AI tool, trading bot, however you want to call it, it's going to be the same in the future. That will magically make you money, but you don't have to do anything. You just have to press the button. Yeah. That will, for retail traders, it will never exist. It cannot, because otherwise all retail traders would make money in the financial market, and that's not the point of the financial. It's not the point of the existence of the financial market, right? Yeah. That for sure, companies like BlackRock, Vanguard, Goldman Sachs, Morgan Stanley, Bank of America, these huge corporations that trade their own capital as well, that they use AI in their favor and they can benefit from that 100%. They're already doing that. But we as small retail traders, to develop something so edgy that just automatically makes money forever and we just have to press the button and AI can do everything. It's a nice fairy tale, but people should not count on that.
It's a good answer. Good answer. Hey, look, Bernd, it's been absolutely fantastic having you on. Tell us about your program. What's the best way for them to find out more about
I have
you?
also a YouTube channel. Just we will for sure put it below the description.
Yeah.
People can find it there. Otherwise, it's onlinetradingcampus.com. Bernd Skorupinski. They can find me. I'm these days also, a quote-unquote a public person, so people will find me anyway.
Yeah, brilliant. Well, folks, what you can do is head down below the video here or in the podcast description. You'll find links to all of Bernd's stuff. Whilst you're down there, hit subscribe, like, and that notifications bell, and we'll see you in the strategy video that we're going to do with Bernd tomorrow.